Welcome, one and all, to this week's Chroma Team Roundtable. For those of you new to this live stream, this is basically a discussion with our panel of very, very good looking and intelligent analysts. Plus our special guest today, none other than Delta XBT, who I have known for a long time, actually, one of my oldest friends in the space. We go back to, I think, probably like late 2021 or early 2022, which for me, that's almost the full extent of my time in crypto. So definitely an OG as far as I'm concerned, and just a really smart and nice guy to boot. We're going to deep dive into I don't know. Well, we're going to ask Delta a bunch of questions and put him on the spot over the course of this discussion, as we like to do with our guests. So look forward to that. And of course, if you have any questions, please feel free to ask them in the chat. The idea of this live stream, as always, is to set you guys up for the next 7 days. We do these streams every week. And the idea is to kind of give you a sense of what we as a team are looking at in the charts, how we feel about the market, do we have any hot takes or otherwise, and kind of set you guys up for the next week. At least until the next roundtable, which occurs every Tuesday. So with that in mind, I would like to welcome our panel of judges and a big special welcome to our guest today, Delta XBT. How you doing, Delta?
Good. Hey, thanks for having me, man. And yeah, it's kind of crazy how far back we go. We were chatting about it a while back, how we did spaces back in the day. All of us had like 2,000 followers or something.
I remember that. Yeah, the PA Kings, we called ourselves. That was
Yeah.
also hilarious in hindsight, because I think I had like less than 12 months experience trading at that point, so the regality wasn't earned. But maybe as kind of a quick overview or introduction as to like who you are and what your trading style is, maybe you could just give us a quick 60-second rundown, like who you are, how long you've been trading, what your trading style is, what you look for in the charts. That'd be amazing.
Yeah. So my name is Zelta. I've been trading actively since 2019. And my trading style has changed quite a lot over the years. Nowadays, I would say that I'm very, much slower paced trader. I wait for, AAA setups, you could say, and I take only them. I just take them with conviction, with size. I realized that, at this point of my life, of my, portfolio size and, you know, will to chase success or whatever you want to call it. That's the thing that fits me most. So I'm more of a swing trader nowadays, like you could say. I don't really scalp much anymore unless I'm super bored and the market is actually interesting, which I think everyone can agree was not really the case for the past 2 years, really. Even though prices are up, I think it's pretty much agreeable that the market has been much more boring than the previous cycle, for example. So yeah, if you guys want to follow me on Twitter, it's at DeltaXBT. I shit post quite a bit. Sometimes I post stuff relating markets, and yeah, that's pretty much it.
Yeah, I shared your X in the chat there, so guys can feel free to shoot our boy a follow. And yeah, I know that you're much more of a high time frame guy, because I feel like anytime I talk about intraday price action or anything under the daily, you just you act like it's all new information to you. So it's always fascinating as someone who, because especially like our team, we kind of a lot of us trade much lower time frames than you. So it's always nice to get a different perspective and look at guys who are basically the epitome of of the zoom out meme.
Yeah, I mean, I really just feel like when I do discuss this with people and they ask me like why did you stop trading lower time frames? I guess it's just that for me the effort has become greater than the result, in the sense of like I realized that in the grander scheme of things, right? So I think every trader should do this, and most don't, because nobody journals, nobody goes over data, nobody takes out all the data from the exchanges and looks at it. But if you do, you should be asking yourself at the end of the year, once you have all the data and you analyze it, okay, how many trades did it take, what types of trades were they, how many trades were this type, how many trades were that type, what type of setups did it take, And then at the once you analyze all of that, you'll realize how much effort did you put into what, and what results did you get from it. And I just feel like, at the end of the day, I realized that there's like 50 trades a year that I take that account to something like 95% of my P&L at the end of the year, which is true, I feel like, to most people. And, so I feel like focusing on those and just teaching myself to relax and, do other things in the meanwhile is the key to my trading. And, I was able to basically free up much more time in the day, way less toxic kind of like staying up late because I don't want to miss anything, giving away to the whole FOMO thing, like basically like not a giving away, but like, getting rid of it. Um, so this is just, that part of my journey currently where there's other things that interest me more than extracting extra, 10% year to date returns from
Yeah,
being
it's the
perpetually online and toxic.
Of course, yeah, it's the Pareto principle, isn't it? It's like 80% of your results will come from 20% of the outcomes, or sorry, 20% of the processes. So yeah, that's
Yeah.
always interesting to see how that works out. And I think a lot of traders have a similar trajectory where eventually they get to the point where they're able to size up and kind of do more, like, I would say, long-term investing rather than intraday trading and scalping. But yeah, no, that's always interesting to hear. I'm going to jump around a little bit because we have a few different topics that I want to cover today. We're talking about FOMC, positioning for Q4 especially. But one of the questions that I want to ask you specifically, because I know that you'll hopefully be able to give an interesting answer, is how you think this cycle compares to previous cycles. Now, I know you said you joined in 2019, so I'm guessing you caught the tail end of what was that cycle, the 2017 cycle, and then you would have seen the entire kind of boom and bust of the 21 cycle, and now we're in what is probably, I don't know, what would you consider this, your third cycle, maybe your 2.5 cycle, or however you quantify it. But I'm just wondering, how do you think this cycle has compared to previous cycles for you?
Yeah, so I've been in crypto since 2016, but I've started actively trading and like actually watching markets pretty much every day since 2019. So I did experience the 2016 cycle as well. And I feel like the biggest differences is just um, how things move and why and who are the participants are is probably the best way of putting it. Because back in 2017, I wasn't really watching charts much. I was just aping into things. um, the space looked very different. I was trading back then on an exchange called um, shit, BTCE. And then they after the FBI shut them down, they changed to WEX. And people were trading on it. I was just aping into stuff. But I feel like the previous cycle was way more like the cycle back in 2020, 2021 was a cycle with um, simple participants. This means people trying to make money, right? And people were not efficient. People were not, I guess you could say smart money, right? And because of that, price action was very, was showing that. You could see huge wicks, huge liquidation cascades, um, altcoin mania. But like if you look at the Bitcoin chart, and you fall as someone who traded that, the rise from 20K to 65K, the first one, wasn't really that interesting because it was mainly Bitcoin and majors. And, right at the end of it, retail started really joining, right? But then the second leg we had from 30K to 69, this was just altcoin mania, full on. Everything was just sending because people were, aping in market orders and stuff like that. And I feel like that the cycle we're in right now reflects the players that are in, right? We have the whole pipe companies thing with the treasuries and all that. So, companies are buying majors, they're doing their sailor Ponzi's. And I would say that we don't really have as many participants willing to go, degen on altcoins. And this is why we didn't really have an alt season besides the meme coin season that we had on chain, which seems to have currently died out a little bit. And I feel like this is just the biggest difference, just the participation of the people participating in the markets, which I feel like really reflects on, to someone as myself who's trading only Bitcoin and Ether, pretty much. The more time that'll pass and the more cycles we go by, I feel like Bitcoin, ETH, and all the other majors will feel more and more like us trading the S&P 500.
Yeah, the increasing efficiency of the market, and it's something you kind of alluded to there about the price action in previous cycles, how less smart money involved, so the movements are more inefficient, and inefficient markets means usually there's more opportunity to profit for the average discretion trader like you or I. Increasingly efficient market means that you constantly have to be refining your craft because you're going against more efficient algos, more efficient machines, more efficient quant traders, et cetera, et cetera. So it's always harder to squeeze an edge out of those kind of markets. And I know exactly what you're saying. Even I've noticed it, and I've barely been around for a full boom and bust cycle. But even then, I've kind of seen it. So yeah, it's a fascinating answer. One last question I want to ask you, Delta, before I kind of run around the panel a little bit, is how you are positioned for Q4. Obviously, we have a lot of volatility in the market this month. We had PPI last week. We had CPI last week. We had Powell kind of setting the stage for rate cuts last month. We have presumably impending rate cuts tomorrow with FOMC. So that for traders who are constantly engaging with the markets on an intraday basis like us, that brings a lot of volatility into our world. But I guess your perspective is always going to be slightly different because you're a little bit more zoomed out, a little bit more focused on the higher time frames. How are you positioned heading into Q4? And does this kind of intraday, intra-week volatility, is that even something that you pay attention to?
So the volatility itself, I do pay attention to it because, on those events, we finally have this volatility that is a little bit fun and worth the effort of trading the lower time frames on. So, when we have FOMC and stuff like that, I do, I'll open the 1 minute chart or like the, I don't know, 2,500 tick chart or something like that. And I'll just, try to scalp it and have fun, make some money. But on the grander scheme of things, I don't really care, for the momentary volatility we have. At the end of the day, I feel like no matter what the Fed says, no matter what world event happens, you will probably have at least 24 hours to react to it. And at the worst case scenario, you give up like 1 or 2 or 3% of your P&L or like your portfolio value, whatever that may be. I think people really overestimate like the rush they need to be in to react to events. Because unless you're leveraged like I don't know 10x or something like that, you're good. You can take your time and relax and all that. So I'm currently still long spot BTC and ETH. And I have like 1% of my portfolio in like other altcoins. But I mean, I've been in ETH and BTC. I've been in BTC mostly I've been like I don't know. Earlier this year, I switched to ETH, which was a mistake, but now I'm above water, so all good. um, so I've been taking profit all the way up. A little bit here and there when I feel things are warming up a little bit. Sometimes adding a little bit, sometimes taking off. But now I basically have less money than I started with, like in crypto, right? Not in the dollar value, but in the crypto value. Um, so, and I do this because I feel like when markets go up, you just have to take profit, right? So I just do that. You will never be able to time the top. So I'll just, I'll take off a couple of percentages here and there. And I think I posted today on my profile a chart with like the 4 year cycle. I'll post it in the chat. I don't know if I can. Okay, there you go. So it's kind of like a meme almost, but if we do follow the 4 year cycle, which has been oddly correct, We will be topping on the fourth week of October, which is from October 20th until October 27th. And I'm not really sure if I want to hold risk into that. This might sound super silly, but I'm not trying to predict anything. All I know is that things are getting a little bit crazy. Prices might, like, people might say, oh, but look, BTC is only at, like, that's the crazy part. People will say, oh, BTC is at only at like 115K. That's like nothing. Where do you see the craziness? But I don't know. To me, I feel like Q4 still has upside. Still, I'm still long, but I will be taking profit into pumps. I think this is where you should be more cautious. This is where you reduce leverage. This is where you take things carefully, unless we have like a crazy dip, like an intraday move of like minus 10% or something crazy like that. Yeah, go off, have fun. But I think a regular person just trying to grow his portfolio shouldn't, long here at 115K, 10x his net worth, hoping for 150. Because we're late cycle. Like, basically, there's a there's a very old tweet from Kobe saying, like, which I fully agree with. Just always mention that it's from Kobe instead of just saying it, because then people might actually respect it more than if I say it. But basically, the lower price is like the bottom of the cycle, or close to it, as close to it as you can. This is where you lever up. This is where you, like, fuck it, my invalidation very close, stuff like that. And the higher we go, you'll reduce your leverage, you reduce your risk, you're more careful, because people have this tendency of rushing when they're trying to make money, but being too slow trying to protect their money. And yeah, I'm just making sure that I secure gains, stuff like that. But I don't know. I'm getting off topic here. But to answer your first part, Q4, I think we still have some upside. I think we will see ETH above 5K. I think we will see BTC at like 100, 25, maybe 130 or something like that. But I do think that when we have those moves up, you should be looking into securing some profits and not lose control and forget that we just pumped from 16K all the way to 125. This isn't the beginning of the bull cycle. Follies, you're muted. I can't hear you.
Thank you for that. Yeah, I was muted. I didn't say anything too interesting, but I was just saying, yeah, it's like traders often get it wrong, where they size up late in the cycle. They size up when prices are high because they're trying to squeeze that last bit of momentum out of the market, right? And you saw it last cycle with guys going crazy on leverage when BTC was already, within a few $1,000s of the Pico top. And we're going to see it again this cycle whenever the top happens, if it does happen at all. Right? But actually, it's the other way around. Like, you should be more interested in buying the earlier in the cycle it is, and the closer to the bear market lows you are. And obviously, it's always much clearer in hindsight. But guys getting super interested in buying now and super interested in levering up and adding size now are probably doing it the wrong way, or maybe they're pushing their risk out a little bit much, which is, yeah, probably not the right way to do it, or at least not the most advisable way to do it. But yeah, that's a really interesting topic to touch on. We might pull that thread a little bit later into the discussion. I wanted to quickly jump around now. Something that I also wanted to ask with regard to positioning for Q4, and specifically in light of FOMC and rate cuts. I see Osbra is on the conversation, or on the discussion. Osbra, I would love to get your take, because obviously we're looking at things from a slightly lower time horizon than someone like Delta. So I'm just wondering, I mean, it's kind of crazy, but Q4 is only 2 weeks away. So how are you positioning with regards to FOMC tomorrow, with regards to the volatility that we can probably expect, even though we know rate cuts are coming? how are you positioned for the last 2 weeks of Q3 and as we enter Q4?
I think you know my bias, so I think the stance to adapt for the last 2 weeks is a defensive stance because around FOMC, even though this one is kind of priced in, because we all know like it's not a surprise that we would have a rate cut. It's absolutely not a surprise. The only surprise even that could occur is if we get 50 basis points. But otherwise, we have absolutely no surprise. But still, around the FOMC, there is always a lot of volatility. So, in order to avoid being caught up in that volatility and to be shaken out, whatever you're long or short, like I think none of the sides are safe. Like if you're short, you're still at risk, and if you're long, you're still at risk at this point right now. I mean, so considering that I am bullish for the Q4 because, in my opinion, and also it's an opinion backed by data and statistics, entering quantitative easing is always a bullish event. And you see a lot now, like I posted my in-depth analysis 10 days ago. And since yesterday, you see on Twitter a lot of stuff spreading, saying when the Fed started quantitative easing, when S&P was 1% close to its all-time high, it always triggered 12 months of upside. So it just adding some fuel to some gas to my theory, I would say, and it makes it even stronger. So I do believe you get an opportunity to position yourself long during the FOMC volatility. So obviously, if there is a week down, then this is the way to go. I think you should try to catch as much as you can of the move that will occur to the downside, and obviously it's something that Monk has been often repeating during his live streams. But you have to do cherry picking. The goal is not to say, "Oh, long everything, buy everything." I think this is the thing that differ from this cycle compared to the previous ones. During the previous ones, and probably Delta was here, considering what he was saying. If they predict 2-3 rate cuts for the remaining of the year, you know that the market is gonna anticipate and gonna pump. If they say we're gonna stay very defensive because inflation is still high, blah blah blah, then obviously you want to be more defensive. But I would add some nuance with this chart that I was preparing just here, and I want to show you guys that having the market pumping with inflation pumping is absolutely normal, and it's not something to be scared about. As you can see, the blue line is the United States inflation rate, right? And as you can see, from 2020 to 2022, it's been up only, but also the red line, which is the S&P 500, has been also up only at a lesser extent, but obviously it's been up only. And then to back my words, then as you can see here, we had 1%. Like 100 basis points cut last year, all right? And you see that we had an amazing performance on S&P still, despite inflation being around the same levels. Okay, you see we've been at 3% and we are at 2.7 or something. Right, yeah, 2.7, we've been at 2.9 the last month, so we're basically at the same levels than 2023, and still S&P has printed an amazing performance. So it's absolutely normal to have inflation going up when you have the rates decreasing, but also when the rates decrease, you see the effect just by 100% basis points, and we had this upside move that was crazy. So imagine if the market expect the rate cuts to continue and to go down towards what the Fed called the neutral state. Like it's obviously it's going to be even more impressive, and it's aligned with all the statistics that I talked about.
Interesting.
I think I'm done.
Yeah. No, thanks for that. Appreciate the input. Here's one for you, and I'll also pass the mic over to Monk because I want to get his opinion on this. But in the meantime, I'm just going to interject something. What do you guys think of? Because I know we've spoken about cycles, we've spoken about cycle tops, we've spoken about quantitative easing, we spoke about rate cuts. A kind of mishmashing all those together. What do you guys think of a situation where we know that Jerome Powell is very likely going to be out early next year once his term runs.
in May.
He's probably in May. He's probably going to go out, and there's probably going to be a very Trump-friendly successor going into the Fed, right? A Trump-friendly successor is very likely going to be cut happy, right? He's going to be doing what Trump wants to do, which is, I mean, didn't he say something recently like he wanted to cut rates by 300 basis points or something, which would be like the largest rate cut in history by a factor of 3x, right? So just assume that this guy isn't crazy and he's not going to do something like that, but he does come in and he wants to, because the Fed chair is a president appointed role, right, or a government appointed role.
Yeah.
So like Trump has to sign off on whoever it is. So he's gonna put, he won't really care what the feedback is. He's just gonna put someone in there who wants to do his business. So imagine a situation where Trump puts someone in there who's just gonna be cutting rates irrespective of the long-term damage it does to the economy in order to stimulate it in the short term, right? We get this kind of extended cycle thing where, crypto and equities. Well, I'm just going to speak about crypto because I don't know enough about equities to say it. But let's say a situation where crypto kind of chops or gets mild upside for the next like 4, 5, 6 months. And then this new chair comes in May, starts cutting rates, going crazy, and we get this proper blow off top alt season euphoria thing that everyone was waiting for. It happens 6 or 7 months later, or maybe even a year later than most people were expecting, in line with the 4-year cycle model, because of the differences this cycle, because of the treasury companies, the DATs, the institutional buyers, the ETFs, because of altcoin dilution and liquidity and capital rotations being slightly different, all these factors, but also because of this Fed chair coming in, relatively late in the cycle and doing what is arguably the most bullish thing that one can possibly do for crypto. I just wonder, is that something that, because I haven't heard almost anyone talking about it, and it seems just very obvious to me that's not only a possibility, but actually a probability.
Yes, absolutely. It will going to be, this is, you look at the dot plot tomorrow. Let's say we take the most bullish case. They say we're going to have 3 rate cuts for the remaining of 2025. So it means you can at least anticipate 3 rate cuts until December. And then at the very least, rate cuts, maybe they will skip until May. But you can expect that from May onwards, the rate cuts will resume. So you can have a projection. You can definitely say, even if the new guy doesn't cut by 300 basis points, it will be a continuation of what we had. And so you can expect that for 2026, 2026 should be bullish. Obviously, there will be volatility, there will be corrections and stuff, but you can guess that for crypto, 2026 will be bullish. And then you need to also understand that it's exactly what Trump needs for his fiscal policy, and he's going to fight super hard for that because his mandate relies on his almost relies. Obviously, there is also the immigration component, security component, but also relies a lot on the fiscal policy that he wants to put in place. And to have that fiscal policy, he needs rate cuts to be extremely low. He kept saying rates should be at 1%, right? So he needs that to be low. And what's going to happen at the end of 2026? And you see the planets, the stars are aligned, because if we enter quantitative easing right now, like tomorrow, what did I say? I said the data suggests that we go for up only cycle for like 1 year. What happens in 1 year exactly? The midterms. And the midterms would be the perfect event to bring back all the shit that the Trump administration would have caused to the US economy. Because, as you said, if you choose a super Trump-friendly Fed chairman, then it's going to cause damages. It will increase inflation. It will, like the USD will lose a lot of value and stuff. And during the midterms, it will be the perfect event for Trump contradictors to say, hey guys, look, inflation is at 7, 8, 9%. Hey, look, the USD has lost its power, blah, blah, blah. And it will create like an absurd amount of FUD. And you can expect at least a correction or the start of a bear market, because what Trump's going to do, okay, I want to be the hero again, and we're gonna increase the rates to lower inflation, to fight inflation, and you will enter another episode of, hey, look, under my regime, we fought inflation, we brought inflation to stable levels, blah, 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 and it will just repeat again and again. But for now, you just need to understand that Trump's want to boom everything. He wants to boom the economy. He wants to boom the stock market. He wants to boom everything.
Yeah, 100%. Monk?
Yeah, sure. Like just to repeat what Oswald said, but we know that the Fed is cutting now, and if Powell sets the tone for sequences of cut, and if the market is believing in quantitative easing returning in 2026, it can be a rocket fuel, to be honest, and it will be maybe linked with some analysts say that we are in super cycle. And for sure, Delta says something at the beginning. It was about the first cycle, and it's quite different now. And the third element is about the infrastructure. We are not relying now on BitMEX or on this kind of perpetual exchange. We have deep perpetual market. I know that Purdue have some good crypto picking since many weeks, and we have hyper liquid also. We have so great infrastructure. We have ETF and all this stuff. So maybe we can have a proper alt season in 2026. But I prefer to be defensive and only focus on the couple of months that just come in October and November. I will be very focused on what will be the tone of Powell tomorrow, and we already discussed today during the market brief, but we have different hypotheses and what will be the strategy of Powell and the Fed about the labor market, and if he wants to cut more in October and in December, he can create more liquidity on the market, and we can target a more all-time high on different assets, of course, BTC. But I think the best focus is more on altcoins. So I really think that the cycle can be large difference from 2018 and 2021. And because we were talking about quantitative easing, I was just checking money stock, the M2, and it's quite funny that every time that we had a quantitative easing, the amount of liquidity that go on risky assets was crazy, and we can have a proper bull run because since November 2024, we had some good sequences of Bitcoin reach a new all-time high. Ethereum did a good run, but overall it's boring. We didn't have a proper bull run on alt season on all the crypto, and we are more maturating for the second part of the year. As you already mentioned, we have treasury firm, we have more amount of liquidity and volume in ETF. We have Trump and a new chairman in the Fed. So we have a lot of positive news, but we have to stay neutral and just advance day by day, and just see what will come in the next couple of weeks. And that's why I think tomorrow will be one of the most exciting time since so many weeks. It will be so exciting to see what will be the question from journalists, what would be the good afternoon of Jerome Powell and all this stuff, because it will create for us a good path. So I think one of the most important is not what he gonna say, but how he gonna say the thing, and what will be the reaction of all this stuff, and also about Trump. Also, what will be this reaction overall after the press conference, and we will have a new sequences in October. I think it's 29th of October and middle of December for the next FOMC. So yeah, I think we are totally different cycle, and I think it was a very good question that you asked at the beginning. It's very funny to see that everything is different, institution, retails, and all this stuff. So maybe we can have a very different narrative in 2026. And I know that also Brian mentioned something about the thing that when Fed is cutting rate and S&P is near the all-time high, we have 20 times a chance that the next on the long term we had a bull run. I saw something on Twitter and I will share on the chat, but it's very interesting and it's based on data. I highly recommend everyone to read this. I will just share it now, but it's very interesting and give a good overview of what we can expect of tomorrow. We can be very choppy and tricky, but then we can have like 12 months of very good trend on crypto. And I really recommend also to check quantitative easing and the impact of money on money supply. So I will share also on the chat. But yeah, this is my view overall about the market and tomorrow exciting event.
Appreciate that, Monk. Yeah, I agree. Tomorrow there should be fireworks one way or another, even if it's just low time frame volatility based on a rate cut announcement that we already know a lot about. But yeah, I think the presser afterwards is going to be pretty crucial and something that I already spoke about in my channel. Powell giving comments that might be interpreted as bullish, or sorry, as dovish or hawkish, might be really kind of telling, or might give some unexpected volatility in one direction in particular. I think a lot of people are expecting that the Fed has pivoted or is in the process of pivoting to a more dovish stance than has been the case in previous months. So I really do think that like any comment to the contrary of that could really nuke the charts in a massive way. I'm actually almost expecting that to happen where at 7 p.m., which my time 7 p.m., when the data releases that we just get volatility in both directions and then price kind of goes back to where it was. But then the Powell presser starts and he says something that might be interpreted as more hawkish than people were expecting, and the market's nuke. I kind of think I have a weird feeling that that's going to be the case. But I want to go back to Delta now. And for the last kind of 15 minutes of the conversation, I just want to loop back a little bit and move away from the Fed talk and the monetary policy talks and just talk a little bit about altcoins, because we started this discussion by talking about previous cycles and how things are different this cycle, and Delta also mentioned he's more of a high time frame trader now, and he has the luxury of kind of zooming out a lot and kind of letting positions run, which is just amazing. But I want to talk specifically about altcoins because I guess they haven't had their moment in the sun this cycle compared to last cycle. But we've had little tastes of quote unquote alt season, little glimpses, little glimpses of hope for altcoins. I mean, there's a lot. Like I still have pretty sizable positions in a lot of alts that are that have barely moved in the last few months or have just been slowly bleeding for a long time. Cough, render cough. I won't go into that one. But I think a lot of people are in a similar position. I know, Delta, you're much more of a BTC trader. I don't think I've ever seen you post any shitcoin charts. But is that something that is still the case, or do you look at coins like I know you said you have a sizable chunk of your portfolio is in ETH at the moment. Do you ever go any smaller than that? Do you look at Solana? Are you looking at these coins like Hype, or even more meme coins like SPX or Filecoin? Does any of that to capture your attention, especially in the last in this cycle?
Yeah, I do. If I see that a certain altcoin is starting to gain momentum and has a narrative going for it, and actually starts to, get some activity and stuff like that, yeah, I'll trade it. I'm not sure if I'll buy it, but I do. I have an account which is for just altcoin trading and stuff like that. But I think the reason this cycle, everything is so different in terms of like the alt season and everything is, well, you even as someone who has been around at a previous cycle, we didn't really now in the contrast of things. You could say there hasn't been that many coins back then, right? We had you could have had basically you knew every single coin people spoke of. Like somebody mentioned the coin and you're like, oh yeah, I know the chart. I know I know what it does. And now people are like, oh, have you traded this and that, and you're like, dude, I haven't ever heard of this shit. What the fuck? And they're like, oh yeah, it's a perp dex or something like that. So, everything has gotten so thinned out. There's so many coins. So my altcoin watch list has like 6 or 7 coins in it. Like right now, I have Sol, MYX, XRP, Fartcoin, Pump, Doge, Avax, WorldCoin, and Hype. Right, and I update it like once a week, and I'll try to look out for setups and stuff like that. But yeah.
So let's say like those coins that you have on your watch list, how do you allocate? Are you waiting for triggers? Are these coins that you need to see strength and you're kind of buying into momentum? Or how does that work? Like, because I know your style of trading and investing fascinates me because it's so different from what I'm used to and what I experience in my day to day. It's much more about like I feel like you're almost at a point where you're investing and your time horizons are very long. So I mean, do you look at a coin like, I don't know, Fartcoin or SPX and just think, nah, this thing is just a metaphorical flash in the pan. I don't want to put any of my net worth in here compared to something like Hype or something like Ethereum.
Yeah, so I don't, so that's the difference with me with majors and altcoins. On majors, I look on the monthly, weekly, daily, sometimes the like 4-hour chart if I want to have some execution, and that's pretty much it. On altcoins, I look at the like hourly, 15 minutes, daily maximum. Because I think like once you go to the weekly and monthly, there's too much noise unless you're looking at majors. Also, like most of them are so young, there is no monthly chart. There's like 2 candles. But the way I like the spot altcoins I have is usually just if I sell some BTC or ETH, like if I'm cashing out some money, I'll sell like 5% of my portfolio or something. I'll just suddenly I'll look, if it's a data, I looked at Solana or Pump or Hype, whatever, or WorldCoin, I'll see some setup that I like. I'll be like, okay, most of it I'll cash out to my bank or whatever, and the rest of it I'll just punt, right? And I have this separation of accounts where like I have an account which is for the day trading when I want to have some fun and I have the energy to it, and I actually the market gives us some volatility to actually trade. So I will punt on that account some altcoin setups, and the way I choose them is very simple. I wanna choose something that has momentum, that has activity, right? A very good website for the people who don't know. Send it to you. You have Orion Terminal screener, which is very good. And if you just go to the link and click on ticks and sort everything by ticks, you'll be able to just see everything based on how many ticks it has per 5 minutes, which is like ticks basically is trades, you could say. So, okay, you have it. Fantastic. So, I mean, this is a really good way to like filter it. You can, in the settings, you can play around and put a certain volume filter. If you want to have coins that are like with at least $100 million volume a day. So, that's how I usually filter out the things in my watch list. I want to have things that move, right? It doesn't matter to me if it goes up or goes down or sideways. I just want it to have, those ticks. I want it to be volatile for me to be able to take a trade in an hour. You know what I mean? Like enter and exit in an hour or two. Because I don't want to, like, I think in this current market where the only real big crypto narrative we have right now is governments buying Bitcoin and Ether, maybe, and companies buying Bitcoin and Ether, and some companies buying Solana and Hype and whatever. And that's pretty much it, right? So yeah, I don't see a reason to hold any altcoin for longer than that. Obviously, there's outliers. Like someone can come to me right now in my DMs and be like, "You're a retard for saying that." Because if you would have bought the, Pump coin in the end of July, you would have been up 4x. I'm like, yeah, but it's one out of 20,000. So it's like there's always going to be outliers, but as a whole, this is how I filter them. This is how I trade them, and yeah.
Yeah, I think something that I've spoken about a number of times before is how previous cycles, particularly 2021, really rewarded like almost like buying and it was the meme. It was just like hodl, buying and hodling and just but like investing, sinking money into these random altcoins and just holding them until they went up eventually because everything did go up. It was a rising tide lifted all ships situation where liquidity was just flowing into the alt market in a huge and sustainable way for almost all of 2021, apart from the summer dip, and then obviously it peaked in November and then just started bleeding out. But the alt market, just in general, like everything was going up, and even like I remember investing in Sia coin, which is just ridiculous looking back in hindsight. It was like my first ever like 5-figure investment. I bought like $12,000 of Sia coin, and I bought like the top of a local pump. It was just ridiculous. It was one of the most awful investments of my life. But I ended up making money on it. I made it like a 1.5x on that investment because everything was pumping at that time. I remember like Kaleo shilled that coin at some point, like a month after I bought it, and it went up like 30% in a day. Like random Twitter accounts with like 300,000 followers were able to punt these like $500 million markup coins and inject huge amounts of capital and liquidity into the market. And that was just kind of the way it was. It was really like, I remember Rookie talking about it. He said it was really just like close your eyes and throw a dart, and it's gonna hit somewhere on the dartboard. There was just so much money flowing into altcoins, and it really doesn't feel like,
Exactly.
with very few exceptions, it really doesn't feel like this has been the case this cycle. Sorry, go on.
Yeah, I'm saying exactly. It's just that there's so many coins, and with the creations of Pump Fun and Bonk Fun or whatever the fuck it's called, and all those launch pads.
Are you sure
and,
you're not
there's
turning 40, man?
No, so like the point is that there's like now 1,000 coins a day being launched, and people are betting on their bonding curves and like trying to snipe them and stuff like that. So like there's I don't know the number, but you could say let's say there's $1 billion that could have flown to 10,000 altcoins, but now instead it's spreading out across 100,000 shitcoins. And that's why basically, yeah, Pedro, sushi farming. But basically, this is why there is no real altcoin season like we remember it, where no matter what you buy, you're making bank and you're cashing in, because there's too many altcoins, too little interest in people buying those altcoins. And I don't know how I don't see how this can change with the current conditions. Maybe it will if ETH breaks 5K, we start some mini DeFi season or something like that. But yeah, the thing is that back in 2017, I feel like back then altcoins were big. We had a small alt run. Well, not small, but we had an alt run back then, which I feel like was because people were discovering altcoins. It was really the first time we had like a bull run with the ETH smart contract function and stuff like that. So that was that. And then back in 2020, you had billions of people locked at home getting stimmies from the government and nothing to do but gamble. It might just sound boomerish out of me, like people will say, "Oh, of course, that's what he thinks. He's trading only Bitcoin." Maybe that's why I'm trading only Bitcoin. I don't know, but I just don't really see how we can replicate conditions similar to what we've had in 2020, where you have billions of people looking at altcoins, and there's only 10,000 to choose from. That's the key here. There's only 10,000 to choose from, because now, again, there's just too much. There's just too much, and every single day, like I don't know if someone knows the statistic, but there's like 1,000 coins made a day on pump fund. And yeah, maybe they don't hit the bonding curve, but they still have some liquidity locked in them. Okay? People are still gonna bag hold them and be like, oh, maybe this works.
Yeah, I saw something where it was like in 2015 there were 500 crypto coins. By 2018 there were I think it was 3,000. By 2021 it was like I don't know, was it 10 million or something? And now there's like 50 million, and by next year there'll be 100 million, something like that. Now, you hit the nail on the head there. Like 99.9% of these coins are just like random shit coins that people launch, and they barely get any investment, and they don't hit that bonding curve number. But it's still like, it's still, to whatever extent, it's still a certain amount of capital and a certain amount of mind share being allocated to these shit coins, right? There's still a certain amount, and especially guys who like, you know, I always talk about burnt capital from like 2022. You know, people talk about like retail returning and capital coming back to the markets, but like, there's a lot of capital that got burnt in 2022. We had, remember, like we had Luna, we had Voyager, we had Celsius, we had 3 Arrows Capital, we had FTX going under, we had, you know, there was all these huge, and like even now, like with all with the celebrity extraction meta and the sovereign nation extraction meta, you know, we had Yeezy, we had Hawk Tua Girl, we had Libra, we had Trump, we had Melania, right? There's all these events that someone says, please note the population has grown as well. Yeah, exactly. That accounts for it. We have all these mass extraction events.
Yeah, all those 6 months older and 2 years older.
Yeah, exactly. We have all these extraction events that, like, in my mind, it just creates this very jaded and cynical investor base. And like guys losing money, like if you lose your net worth on Libra, it's not like you're like, oh shucks, okay, well, I'm just gonna pick myself up by the bootstraps, and as soon as I have a few paychecks together, I'm getting back into crypto. No, like if you lose a decent sum of money because the president of a sovereign nation rugged you, you're not like that. You don't come back from that. You know what I mean? You're not saving up your pennies to you know, to get back into crypto ASAP. Like that's probably you done for a long time in crypto, and I feel like there's a lot of that burnt.
Or you come back and you're like, I'm only gonna touch Bitcoin and Ether. You know.
I guess so. Yeah, I guess so. But in a sense, it's kind of like there is capital that rotates out of the market and it never comes back. I think that's something we always need to be cognizant of. Speaking of being cognizant of things, I'm cognizant of the fact that it is now 2 minutes past the hour. So I'm just going to do a quick run around for our panel. If you guys have any questions specifically for Delta, as he will never be invited back here again. No, but he will obviously not be a regular panelist unless I can convince him otherwise. But if you guys have any questions, please fire them into the chat. Otherwise, we'll probably wrap things up in the next 5 or so minutes. Next 4 or 5 minutes. I saw Purdue had a question.
Yeah. What do you think of like how? Sorry, do you hear the drilling or not?
No drilling.
No.
What do you think of like the correlation that like gold pre-ETF era basically was trading kind of the same as BTC, but after the ETFs came for gold, the prices never became the same actually, and it just slowly grinded up. What do you think of the trajectory that BTC has the same kind of PA going forward, like gold, especially when it is like a scarce asset and instead of with gold? Like you're still believer of the 4-year cycle, or do you think we're entering like a super cycle where things can go up only for BTC, like a slow grind up?
I don't know. I think comparing Bitcoin to gold it hasn't proven itself yet, in my opinion, right? I think at this point, Bitcoin is still a risk asset. And yeah, it is scarce, but it doesn't mean, like, not everything that's scarce is instantly comparable to gold, in my opinion, right? And, you know, a lot of people don't like hearing that fact, but Bitcoin is a risk asset at the end of the day. And if there is a war, if there's bad shit going on, Bitcoin drops, right? So I think there's no reason to treat Bitcoin at this point as some safe haven because it's never proved itself to be as one. Every time there's been a war announced, gold has went up while Bitcoin has dumped, right? in COVID, Bitcoin basically went to zero. Gold also dropped a bit, but not as drastically. So I think, I don't see us, like, there is no reason to compare that to, like, one to another. With gold, there's so many factors. I'm not gonna LARP as someone who understands all of them, but we had the fact that you have the fact that it's used, right, in technology and stuff like that. Like, it is a consumable a product, you could say. Where with Bitcoin, it's just this premise of, like, there's only 21 million coins. That's it. So I don't know. I think there's no reason really to compare them to each other. And I don't know. I can tell you that if I have a wallet with like, this might be just the boomer in me, but like, I have some gold on my table in my office. Like right now, there's a small bar of gold, like an ounce, and I love it way more than a wallet with 1 Bitcoin in it. So I don't know.
Delta with the sly flex. Man just has an ounce of gold on his office.
Yeah.
I have empty coffee mugs.
More than
and-
that,
Yeah. It's something like a reminder of how far I've come, right? So you're gonna say something like that.
Yeah.
Yeah. No, I get it, man. Listen, some guys flex their Rolexes on the timeline. Some guys have their Lamborghinis. You just have a fucking ounce of gold sitting on your desk every day. I get it, man. I get it. That's all right.
Dude, an ounce of gold is tiny.
No, I know. Trust me, I know what an ounce is and how much it weighs roughly, and I won't get into that anymore. We were all in college once. But on that
if anyone
note,
needs to know something about tiny things, just let me know.
I thought you were gonna say ask Follows. That would have been way more a fitting end to the
I would
conversation.
never disrespect you in your own Discord.
Exactly. Yeah. No, I have the power to ban people. You're playing your cards very smartly. On that note, guys, we are going to wrap things up as it is just gone past 5 past the hour. So I want to say first of all, massive thank you to Delta for joining us on this week's Market Roundtable. Always fascinating to ask a bunch of questions and get insight from a guy who trades slightly differently to the rest of the team. As I said before, guy is just a super smart dude, and I've been trading with him for a long time. So please go follow him on Twitter. Oh my goodness, what is that screenshot? Someone banned this guy immediately. Please go follow Delta on Twitter. I will post his social. I'll post his X in the chat once again. Massive thank you to our panelists, to Monk, Osbra, and Purdue for joining and for giving their takes as well. And big thank you to you guys for spending the last hour with us. As always, it is much appreciated when you guys invest your time in us, and we try and do the best with that time as we can. The last thing I will say to the 50 of us listening is I posted that link to the form in my channel today, the feedback survey. Please, if you're listening to this and you haven't done it yet, please go do it. It takes 3, 4, 5 minutes. It's very quick, but the feedback that you give us will help us shape the trajectory of Chroma going forward. It's incredibly important that we get as much feedback as possible. So I am shamelessly shilling my feedback survey on this call. Please go check it out. Please give as much feedback as possible. The more honest you are with your answers, the better it is for us. And that's about it, guys. We're going to call it there. Big thanks to everyone for joining once more. And we will see you next week for next week's roundtable. Thank you, guys. Take it easy. Enjoy the rest of your day. Bye-bye.